multi-data charts. Multi-data charts really allow you to take your experience and your analysis in TradeStation to the next level. Please keep in mind that all examples, symbols, and ideas discussed are for demonstration purposes only and are not recommendations or endorsements of these examples. Past historical performance does not guarantee future results. If you have trouble viewing this presentation, please go back to the logon page for troubleshooting help. You can also refresh the presentation at any time by pressing the F5 function key. In the lower portion of the viewing window, you'll notice a box through which you may submit questions. During the presentation, I'll do my best to answer as many questions as possible, but remember that all questions submitted will be answered. So let's get started. The agenda for today is we're going to look at creating multi-data charts, overlaying one data set on the other, and the scaling issues that are associated with overlaying symbols. We'll also look at applying indicators to multi-data charts and some of the behavior and some of the methods that are necessary to do that. We'll also look at an advanced charting technique called a percent change chart, and how percent change charts can be used in a very similar way as when you overlay one symbol over the other, where you're looking for correlations in price movement. A percent change chart is really a way of quantifying that mathematically, what that relationship between two or more symbols are. And so we'll take a look at percent change charting as well. And of course we'll look at some advanced multi-data topics, including some topics regarding volume and how we can display volume information more effectively using a multi-data chart. And we'll also look at creating a composite index, our own custom composite index. And we will also look at some advanced things like sector analysis and how we could use a multi-data chart to do some sector analysis inside of TradeStation. So we'll look at all of those ideas today. So let's get started. The first thing I'd like to do is I'd like to talk about just some of the basic principles of multi-data charting, and then we'll actually go into TradeStation and do some of this work. First of all, each chart in TradeStation has the ability to contain up to 50 unique data streams. So each chart can actually have 50 data streams within the same chart. They can be 50 different symbols, or they can be the same symbol at 50 different intervals. Maybe you have Microsoft in at 1 minute and 3 minutes and 5 minutes and 15 minutes, so on and so forth. Or it could be a combination of multiple symbols and multiple intervals. It really can be anything that you want it to be, as long as the symbols and the intervals that you're mixing are time-based. One of the restrictions of multi-data analysis is that you cannot use activity-based charts in a multi-data chart. This precludes using tick or volume bars within a multi-data environment. Multi-data charts can be used in indicators as well as strategies. So you can have whatever indicators that you're using can look at multi-data streams within the same chart. You can also have strategies that look at multi-data analysis. Maybe you are looking at an underlying index, or you're looking at multiple intervals to make trading decisions. A multi-data chart would allow you to do that as well. Multi-data charts, as I said earlier, allow you to overlay one symbol on top of the other symbol. But this is really accomplished in a more mathematical way using percent change charts, which we will also look at today. A percent change chart is simply a way of creating a reference point in time and saying how did each of these symbols perform relative to each other from that point in time. And so we'll look at that as well. One restriction to multi-data analysis is that at this time you cannot use indicators that reference multiple data streams in indicators for either radar screen or option station. So at this time neither of those two grid-based applications can utilize multi-data analysis. But I'm hoping that in the future that will change. So let's go to TradeStation. We're also going to touch a little bit about multi-data analysis in EasyLanguage. We'll actually look at a couple of indicators that I wrote today for this course, and we'll actually look at how multiple data streams are referenced within EasyLanguage. So this course is really a hybrid course from the point of view that we're going to look at the functionality within the TradeStation platform, but I also am going to spend a few minutes looking at the EasyLanguage code as well, so that you can get a feel for how you can write your own custom indicators utilizing this technology. So let's go to TradeStation and just start off with the basics. As part of this seminar, I've created 6 workspaces. You'll see them at the bottom of the TradeStation platform here, Multidata 1 through 6. Each of those we'll go through here today. Spend a little bit of time with each workspace, giving you some examples of how multidata can be utilized in TradeStation. In addition, I've written a number of custom multidata indicators that are utilized within those workspaces. As part of the archive for this seminar, when the seminar is over, we archive this seminar on our support site, and there will be a zip file which will include these workspaces and the custom EasyLanguage that you are going to see here today that are part of this course. So you'll get those indicators and those workspaces as part of the archive for this course. It usually takes 2 or 3 days once we've completed the seminar to get that up on the support site, so make a little note to yourself to go back and get those materials in a few days. So let's go to Multidata 1. And the first thing we're going to do is we're going to talk about overlaying one symbol on top of the other. And here is a multidata chart where I've overlaid the spiders and the cues on top of each other, the spiders being green, the cues being that orange color. You can tell the symbol here because it says spiders in the actual caption here of the chart is green, so you know the spiders are green. Here you can see the cues are that orange color, so the orange in fact is that color. So let's talk about how we actually accomplish this by laying one symbol over the other by creating a completely brand new chart. So I'm going to go to the chart analysis icon here and create a brand new chart. I'm going to make this a daily chart of the spiders. So here's a daily chart of the spiders. And to create a multi-data chart, we're simply going to go to the Insert menu and say Insert Symbol. This will be the mechanism for adding one additional symbol or 50 additional symbols to the same chart. It's always going to go to Insert Symbol. Here I'm going to type in the symbol that I wish to insert into the chart, and I'm going to make that QQQQ and hit Enter. That adds the symbol directly into the chart, into its own unique subgraph. A chart is able to actually hold 16 of these unique subgraphs. So if you do the math, there's 50 possible data streams and only 16 subgraphs. Something's going to have to happen with those other 34 data streams. They're either going to have to be scrunched into additional, into subgraphs that are already occupied, or you're going to have to hide those data streams. And we'll talk about how we can hide a data stream as well. Once you insert it into the chart, of course, prices are updating real time on that last bar. Even if you've hidden the data stream, you're able to, that data stream is still updating real time and is part of the calculations. Now when you have a multi-data chart with multiple subgraphs, you can adjust the size of those subgraphs. You'll notice if I move my mouse in between those two subgraphs, I grab that subgraph divider. It's right there. You get that unique icon. If I left click and hold, I can resize the window and size those two subgraphs. You can do this with indicators too that are in their own subgraph. Just look for that little icon, hold the left mouse button down, and you can resize those subgraphs. So in this particular example, though, we want to overlay one symbol on top of the other. Now you'll notice that the spiders are trading at $140 a share. The cues are at $40 a share. If I grab this and I'll click on it, when I say grab it, what I mean is I'm going to click on it, and then I'm going to put my mouse on the bars. I'm going to hold down the left mouse button until I get that hand. That hand allows me to drag that symbol up to the next subgraph. When I release it, it asks me where do I want the scale for the cues to go. Now if I put the scale for the cues on the right hand side, well, it's going to scale the axis, it's going to scale that y-axis for the maximum prices between those two symbols and the lowest prices. So what I end up with is two symbols sharing the same axis, and I end up with a chart that looks like this. Hold on. Well, what I ended up with there is the chart that I was looking for. We'll redo that, and I'll show you what happens if you put it the wrong way. In this case, what we did is we actually set the scale to the left-hand side. Notice that we get a brand new scale here, and we also have the original scale for the spiders here. If you right mouse click in this scaling area, you can see that you have the choice to have either the spiders or the cues on that same scale. Here, if I turn this off, there's no scale, and now it's the spiders on both sides, and the cues are not scaled at all. Let's turn that back on. There's the scaling for the cues. So here we're able to overlay one on top of the other. You can actually grab the cues and put them back into their own subgraph if you want to. Make sure you click, left click and hold, and drag it all the way to the bottom. When you get to the subgraph, you'll get a new little icon that is a chart. As soon as you see that chart with a little asterisk, you can release. Once you see that chart, and then that gives you the ability to put it back in its own subgraph. So the little squares that you see where I'm clicking on the bars, that simply says that I've clicked on that item. It's just a way of showing what's selected in the TradeStation platform. Notice that the scaling over here is still on. I can right click and I can turn off that left axis just by turning that off. So you can turn that on anytime you want to. Right click inside here and you can turn on or off that left display axis. So what I wanted to show you the first time, we'll do it again here. I'm going to grab this, left click and hold, bring it up here. Now if I were, and again it automatically knows to put that into that subgraph, but notice that I don't have that axis over here anymore. So I'm going to right click and I'm going to turn that on, and there we go. Now if I were to change that scaling, and let me show you how we're going to do that. I'm going to turn off this left scaling. I'm going to double click on the cue bars, and that's going to take me, actually it's not going to let me double click because of the way our seminar technology works. I don't have double click in this window. So what I'm going to do is I'm going to go to Format Symbol, and here you can see the symbols that are in the chart. There are two symbols in the chart right now, and they're listed as Data 1 and Data 2. The spiders is Data 1, and here the cues are set up as Data 2, which is what we added to the chart. I'm going to click on the cues and click Format. And the reason I want to show you this is that I want to go to the Scaling tab and talk about that scaling. Now here notice we have the scaling set to left axis so that it has its own unique axis. If we were to change this to right axis though, and click OK and close, notice what happens, and this is what I was trying to show you originally, is that if you use the same right axis, it just is going to scale from the highest level here to the lowest level here, and you don't get that effect of overlaying one on the other. That's where we're going to go to that Format and change that scaling to left axis, and that way we get the axis exactly the way we want to, one on the right and one on the left. And that's overlaying one symbol on top of the other. So the process there is very straightforward. If we go to Format Symbol, here you can see that you have access to formatting either of the symbols that are in the chart, either for their interval or the amount of history that's loaded. Just select the symbol that you want, click Format, and here you can even change the symbol. If we don't want the cues, we can put on the diamonds. Click OK and close, and now it's the spiders and the diamonds overlaid on top of each other. And again, the scale over here now, if I right click, you can see the scale on the left is diamond. So the process is very simple. To create a multi-data chart, you're simply going to go to Insert Symbol and add one or more additional data streams to that same chart. Let me close this chart, and I'm going to create a new chart, and here we have a 5-minute chart of the spiders. We also have the ability to go to Insert Symbol and insert the spiders again, but this time at a different interval. So I'm going to click Prompt for Format and click Plot. And here, instead of using a 5-minute chart, which is already in the chart, I'm going to make this second data stream a 15-minute chart of the spiders. Click OK. And here I have the spiders, both at 5 minutes and at 15 minutes. And I could add an additional stream at 30, an additional stream at 60, an additional stream at daily. And then my analysis, whatever my analysis may be looking for correlations between all of those time frames and my indicators. And I can use one interval to confirm the next interval before I make a trading decision. So multi-data charts can either be different symbols, They can be the same symbol at different intervals, like in this case, or it can be a combination of either of those two. I'm going to grab the cues here. To remove a data stream from the chart, in this case I can click on the cues. Notice the cues are highlighted with those little boxes. If I press the delete key on the keyboard, that removes the data stream from the chart. I can also always go to Format Symbol and remove the additional symbols from that dialog as well. Alright, so that's how we create a multi-data chart. Let's talk about how we would add indicators in a multi-data environment. Here I have two charts, and one chart has the spiders at 5 minutes, 15 minutes, and 30 minutes. And you'll notice that I have a two-line moving average applied to each of those three data streams. So we'll talk about how to apply indicators on our additional data streams within the same chart. We also have a chart here which is the spiders and the cues. And here we have those two symbols in the chart and a number of indicators that are used to calculate the relationship between those two symbols. And we'll talk about spread indicators, correlation indicators, and relative change indicators between multi-data elements within a chart. But the first thing I'd like to do is I'd like to talk about adding indicators in a multi-data environment. So what I'm going to do here first is I'm going to take my multi-data chart here and I'm going to expand this, and I'm going to remove the indicators that are already on here. By clicking on those indicators, I'm able to grab them and remove them. There we go. So here is a typical environment where I have the spiders at 3 intervals, and I want to put my moving average indicators on all 3 of them. Maybe I'm looking for all 3 of them to, to have the fast moving average above the slow moving average and look for those correlations. So let's do that. The first thing we're going to do here is we're going to go to Insert Indicator, and the indicator that we're going to insert into all 3 data streams is the moving average 2-line indicator. So I'm going to highlight that here, and I'm going to click Prompt for Format, because in order to apply an indicator to a multi-data stream, we're going to have to make one change to the properties of that indicator before we insert it into the chart. And the property we need to change is on the General tab of the Format Indicator dialog, and that is what data stream is this indicator going to be based on. So I'm going to click Prompt for Format here so that I can go to that formatting dialog before the indicator is inserted into the chart. Here I'm going to click OK, and I'm going to go to the General tab, and this drop down here is the drop down that determines where the indicator will be displayed and what data the indicator will use to calculate. In this case, I'm going to insert this just into the first data stream in the chart, which is a 5-minute chart, which is the default, which is the data one that created the chart. I'm going to click OK, and that's nothing particularly new to you. You insert an indicator, and that indicator goes on the data stream that created the chart, of course. But let's add that same indicator now to the other 2 data streams. That's where it gets a little more interesting, and that's where that drop down comes into play. If I go to Insert Indicator and grab that moving average 2-line again, click OK. Again, remember, Prompt for Format must be checked so that we can go to this dialog first. Here, now I'm going to select that second data stream, which is the 15-minute chart of the spiders. I'm going to click there, click OK, and now my 2-line moving average indicator is applied to that second data stream. So that drop-down controls where the indicator is plotted and what data it's using. One last time. Insert Indicator, 2-line moving average, OK, General tab, and here I'm selecting data 3, which is the 30-minute chart of the spiders. Click OK, and there the indicator is applied to all 3. Now, it gets a little trickier when you insert something like stochastic or volume. If I insert the stochastic indicator, coming down here to stochastic slope, if I insert this, by default it wants to insert it based on the 5-minute chart. So I'm going to click OK, and there we have our 5-minute based on data 1. But if I insert that indicator again, slow K, stochastic. And I insert this based on the second data stream, the 15-minute chart, click OK. Here you can see it looks obviously the values are different, but there's no way to really see here. There's really no way to see here that this one is based on the second one and this one is based on the first one. So the best way to notate that is maybe with a little text object on the chart, or maybe even have an input. Create a custom indicator that has a special input where you can actually just have a little message that says this is based on data 2, so that message shows up here in the list of inputs. So there's a couple of different ways of getting around that. But if you do that with these other indicators that plot in their own subgraph, try to keep track of where they go. I mean, you can even drag the subgraphs around so that this stochastic is under this symbol and this stochastic is under this symbol. That can all be maintained by just arranging the subgraph order in which you want to order them. So there's lots of different ways of working with that. I'm going to close this chart. And next I want to talk about different symbols. The last example was using the same symbol and inserting indicators on the same symbol. Let's talk about inserting indicators that are based on two different symbols. In this case, we have the spiders and the Qs, daily charts of both. And we have three indicators. I wrote three custom indicators so that you can get a feel for the power of multi-data analysis. The first indicator that I wrote here is a spread indicator. This indicator has two inputs, which is what two data streams is it going to calculate that difference. And basically what it does is it takes data 1 and divides it by data 2. So if you just take 140 and divide it by 43, you're going to get 3.2387. And that raw number by itself is interesting, but it's simply a mathematical calculation between those two data streams. It becomes more interesting, though, if you take an average of that relationship, and you can see whether that relationship is high or low relative to the historical reference of that ratio. And so the blue line you see there is a 50-bar moving average of that ratio. And that makes it a little more interesting. You can see right now we're pretty much in par. But there are times when that is spread higher and lower than the normal average. And that's the basis for a lot of pairs trading, where you're looking for the relationship between two very correlated symbols to slightly get out of sync, and then you go long one symbol and short the other symbol, hoping to capture that inefficiency as they come back into correlation. So that brings up an interesting point, and that is correlation. The correlation indicator that comes in TradeStation, and you can look at that if you'd like to. There's already one in TradeStation. If you go to Insert Indicator, there's actually a correlation indicator here, which is a multi-data indicator. It looks at data 1 and data 2, and it counts how many bars over the last 14 bars were they both going up at the same time or going down at the same time. So it's not a very sophisticated mathematical formula for correlation, but it does see how many days or how many bars out of X number of bars did they move in the same direction on the same bar. There's a little more mathematical way of calculating correlation, which is the coefficient R calculation. I'm not a mathematician by any stretch of the imagination, but is a more programmatic, a more algorithmic way of calculating correlation. And since that indicator is not built into TradeStation, I wrote that for you here using the using the coefficient R function. And so this is just another way of looking at correlation. You can look at them side by side and see which one you like best, but this uses that coefficient R function so that you have a choice in measuring correlation between two instruments. The way that you read this indicator is that if it's 0.7 or 70% or higher, we consider that correlation. Anything that's minus 0.7 or 70%, minus 70%, we would consider oppositely correlated. And then, of course, anything in the zero area is just noise. It's just non-correlated at that time. So here you can see for a short period of time this was going up, this was going down. It was completely opposite. Here you can see the Q's going up, the spiders going down during that little period of time right there and there. and then that's when that correlation just drops to zero. There's no correlation between the two. In fact, if it would have gone on long enough, it probably would have even been oppositely correlated there, but it didn't last that long. Finally, an interesting indicator that we write in a number of our, and we display in a number of our courses, is the relative change indicator. This indicator actually measures the performance on a percent change basis over X number of bars, kind of like the percent momentum change over, in this case it's 20 bars, but you can change that to whatever you'd like to. And basically it says over the last 20 bars, which symbol has been outperforming the other symbol and by how much as a percentage. And so basically the way to read this is that when the blue line is above zero, the spiders are outperforming the Qs, and when the line is below zero, the Qs are outperforming the spiders on a percentage basis, over 20, in this case over 20 bars. So here's again a pairs trading concept where you're able to look for those peaks or valleys where one is overperforming the other. You know that they've got to come back in correlation. Maybe there's a pairs trading opportunity there where you go long one and short the other, and relative change is one way of measuring that relationship. So a couple questions here. Let me just get to a couple questions here, and then we'll move on. One of the questions was that you're trying to create a multi-data chart using a tick chart. One of the things that I said at the very beginning was that multi-data charts do not work with tick or volume intervals. Since there can be many bars at 1 minute or not any bars for several minutes, there's no way really to align those bars in an effective way. So at this time there's a restriction in TradeStation that we do not allow you to mix time-based and tick-based intervals in a multi-data chart. Multi-data charts must be all time-based, minute, daily, weekly, monthly. Those are all time-based. You can have a multi-data chart that's a 1 minute interval and a monthly interval. That doesn't matter. They're both time-based. But you cannot mix tick and volume bars in a multi-data environment. Another question was, and again I said this at the beginning, all the materials that you're seeing here, the workspaces, the custom indicators that I've written, these will all be posted with the archive as a zip file, and you can just download them and you'll have access to all of these indicators and workspaces that I'm showing you here today. All right. The next thing I want to talk about is a percent change chart, and that's what you're looking at here. A percent change chart is a multi-data chart where we take that concept of overlaying one symbol on top of the other, but we turn it into a more quantitative way of looking at that relative performance between one symbol and the other instead of just visually overlaying one on top of the other. I've never been a big fan of overlaying symbols on top of each other because a lot of times there are crosses and there are peaks and valleys that can be deceptive in the behavior between the two symbols. And that a lot of times, especially when the symbols are very different prices and often very different volatilities, things that you think you're seeing when you overlay on one or the other isn't really what you're seeing. And you have to be careful when you're doing that kind of analysis that you don't fool yourself. Here with percent change chart, it's all mathematical. There's no interpretation here. A percent change chart simply takes a reference point on the chart where all of the data points come together on that particular point. And so here I have all the data points coming together in January, and then what we do is we measure the relative performance of each of those symbols from that point moving forward. Here we have 4 symbols in the chart. If I go to Format Symbol, you can see I have the spiders, the Qs, the diamonds, and the iShares. I believe that's the Russell 2000. Yeah, so that's IWM. And here we can see how those 4 symbols have performed relative to each other from January of this year. And here you can, if you right-click on any one of these, for example, the blue line is the diamonds. This is a quick way of seeing which symbol is what. Simply click on the line itself, right-click, I'm sorry, not click on, but right-click. The green line is the spiders. If I click on the orange line, I can see the orange line is the Qs, and the yellow line then must be the Russell 2000, the IWM. So you can see here that the Qs and the Russell are a little bit positive so far this year. Spiders and the diamonds are down a little bit. The diamonds down the most here. The diamonds are down almost 1.5% since January of this year. So let's talk about how we would create one of these percent change charts. And I'll even show you a more interesting way of looking at sector analysis with this kind of a chart a little bit later in the seminar today. So what I'm going to do here is I'm going to create a new chart, and I'm going to make this a daily chart of the spiders. So here we have our daily chart of the spiders. I'm going to create another symbol within the same chart. I'm going to go to Insert, Symbol, and I'm going to add the diamonds right into this chart, DIA. Leave it as daily. So now I have my spiders and my diamonds within the same chart. Let's do that again. I'm going to go to Insert, Symbol, and I'm going to add the Qs. Q, 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 Q. And click OK. So now I have the spiders, the diamonds, and the Qs. Once you have all of the symbols in the chart, you can create the multi-data. You can create the percent change chart by simply right-clicking anywhere on the chart and saying, let me click down here. It's off the screen a little bit. There we go. And coming here and saying percent change chart, and then enable. This takes our multi-data chart and converts it to this format, which is the format we were looking at a moment ago. By default, the reference point for the performance is always the very first bar in the chart. Notice how all three symbols start off together at that point, which is roughly April of 05, and then we can see the relative performance between those three symbols over the course of the last 2 years. Here you can see the diamonds, the spiders, and the Qs, where the diamonds were performing very well in the January of 06, and then the market kind of turned around a little bit. Here the market kind of changed where the spiders were doing best, the Qs were in the middle, the diamonds were underperforming here, so the spiders were now outperforming the diamonds. You see that performance, and here we are till today. So one of the ways of reading this is to think of it this way. If I were to have invested $10,000 in each of those symbols way back in April of 2005, how much would that investment be worth today? Well, the Qs would be worth about 16%. The spiders and the diamonds are both worth about 19%. So I would have returned about 19% on those two investments and 16% on the Qs if I had bought those three instruments in April of 2005. So it shows me how much it changed as a percent from that reference point, which was the beginning of the chart, April of 2005. But with a percent change chart, you can create that reference point anywhere you want to on the chart. So for example, if I want to know how we've done so far this year from January of 07 until today, basically what I'll do is I'll look for that January 07 bar, and we can actually see that in the grid here, and if I right click right at that point, I can then go to my percent change chart and say calculate from this bar. And by clicking on calculate from this bar, notice my reference line comes in here at January of 07. All of the points come together at that point, and then I calculate the relative performance from that point forward. And this is what we were looking at a moment ago. And so here we can see that the diamonds are just a little bit above water here, and then the spiders and the Qs are both down a little bit from January of this year. Once I have the percent change chart and I have my reference point, it's very easy. I can insert another symbol at any time I'd want to. And so here I can go to Insert Symbol, and I can add any symbol I want to. Let's see how Microsoft has performed relative to these three symbols. So I'm going to click Plot and OK. And there's Microsoft as this new bright yellow line. So you can just right in line add any additional symbols that you'd like to. You can see Microsoft is down 6% for the year at this point. It was down 10% at one point there. How come I didn't buy it right there? I'm going to go to Insert Symbol. Let's try a different symbol. Let's see how Google has performed since the beginning of the year. Remember, as a percentage, click OK. Google is this new green line that we just brought in. How do I know that? Well, because it wasn't there before, for one thing, and also I can right-click on that line, and I can see it says format Google, so that must be Google. Google's down about 5% so far this year. And again, you could keep adding additional symbols. How about crude oil as opposed to all of these things? How is crude oil done? What I can do is go to Insert Symbol, and we can use the USO for that, which is the holder on the American Stock Exchange. It's a stock that trades like oil. I'm going to uncheck Prompt for Format here because I'm not really needing to go to that dialog right now. And I'm going to click Plot, and we can add oil and see how oil's done. Oil did really great relative last year, but this year it's kind of flat. And we can see that as that orange line right there. So the idea here is that we can create a percent change chart. We can fix the reference point anywhere on the chart that we want to. And of course we can add additional symbols, up to 50 symbols, to that percent change chart. This can be done at any interval. Right now I'm using daily interval, but if I wanted to, I could make this a 15-minute chart. I'm going to type in 15 minutes and hit enter. Now all symbols are 15 minutes. This is kind of an interesting analysis. What you could do is you could say every Monday. Use every Monday as your reference point and see how these 5 symbols. Let's do that percent change chart. Yesterday was Monday, so I can say calculate from this bar. There I create my reference line as of yesterday, and I can see how all of these symbols are performing relative to each other this week using this 15-minute chart. I could probably make it a 1-minute chart and see how all these symbols are well, not probably, I could make this a 1-minute chart and see how all these symbols are performing relative to each other with starting this morning, and maybe there's a trading opportunity there as well. So it's a very interesting way of looking at the analysis. Let's answer a couple of questions here regarding percent change charts. One of the questions that I got is the nature of the calculation of percent change charts. It's not annualized. What it is simply the percent change from this reference point until today. So for example, it's a calculation that simply says the close of this bar minus the close of this bar divided by the close of this bar gives me this percentage. And so it's not annualized. Now if you want it to be annualized, all you have to do is figure out where 1 year is from this point. So if you marked back 1 year from this point on a daily chart or a weekly chart or a monthly chart, then it would be annualized based on a calendar, based on a trailing 12 months. In this case, when it was a daily chart, I was looking at January of this year, bringing it forward. So the nature of the calculation is all about where you put this reference line. This reference line determines what the percent is here from that reference line to the current bar. So I hope that answers your question about whether it's annualized or not. The other question is TradeStation capable of calculating relative strength of some symbol versus an index like the Qs or the spiders? Well, certainly in a chart you can have up to 50 symbols. If one of those symbols were, for example, the S&P 500, I could then calculate the relative performance for the other 49 symbols in the chart against the S&P 500, or against the Qs or the diamonds, or from any from any index that I want to. But in the charting environment, I'm limited to 50 symbols. One of the symbols would have to be the underlying index that you want to use as the comparison, and then the other 49 symbols could be compared against that underlying index. Now radar screen is a little different. There are some fundamental fields in the new fundamental data that comes with TradeStation that actually gives you the relative performance of any symbol against the S&P 500 as a fundamental field, and that information is updated on a daily basis. So if you want to look at that information in radar screen, you could put a list of 1,000 symbols in radar screen, and then you could see what the relative strength of any one of those 1,000 symbols to the S&P 500 is by looking at that fundamental field. But right now you're limited to just the S&P 500 because that's a fundamental field that comes from Reuters. But if you want the underlying index to be any symbol, and you can work within the realm of just 50 symbols, then you can do that within a chart. Okay, so that's a percent change chart, and this is one of my favorite charting styles. I'm going to go back to daily here, and you can see that relative performance. Now the interesting thing is here I can go to Format Symbol, and instead of 2 years of data for each of these symbols, I can make it 10 years of data for each of these symbols. Now the only problem is USO does not go back 10 years, neither does Google, so I'm going to remove those from the window here. But notice that all of the other symbols are now 10 years. Click Close, and then I can go all the way back to the beginning of this chart and say January of 2002. So since January of 2002 until today, how have those 4 indexes performed relative to each other? So you can go and do some really interesting long-term analysis here. Calculate from this bar, and there you can see how those 4 instruments have performed since January near the peak of the internet bubble, how these have performed from that particular point. Go back, there's January right there. And see how those have done. Q's, Microsoft, spiders, diamonds. Interesting. All right. Let's move on. This topic, this is a workspace that I'm going to give you. I'm just going to talk through this one a little bit. It really isn't part of my agenda today, but it's a workspace that I use quite often, and so I'm providing it here, and we'll just talk about how I use it a little bit. If you use the volume indicator, and I'm just going to create a quick chart here. Make this a 5-minute chart of Microsoft. If you insert the volume indicator, an interesting behavior of this volume indicator is that the volume indicator in this particular environment, 5-minute chart of Microsoft, is showing me the number of shares that trade every 5 minutes. Which is fine, but if I want to know the number of trades that occurred every 5 minutes, that's a setting that I have to change in the Format Symbol dialog, because the volume indicator can display either the number of shares per bar or the number of trades or ticks per bar, but it can't display both. It can only display one or the other at a time, based on a setting in the Format Symbol dialog. Here, this drop-down controls how the volume indicator reports volume, either in share volume or in tick count, but never both. So here, if I want to look at the number of trades per bar and click OK, now I'm getting the number of trades per bar. So the volume indicator and the volume keyword in EasyLanguage is either shares per bar or ticks per bar based on this drop-down, but never both. Well, that becomes problematic, because what if I want to calculate average trade size, which would be the number of shares per bar divided by the number of trades per bar. If the volume indicator and the volume keywords in EasyLanguage can only display one of those two values, there would be no way to be able to come up with that formula. And this is where multi-data analysis comes in. In multi-data analysis, I can insert the same symbol in the chart, and I can change the format for this one, the first symbol in the chart, to be the tick count. And I can change the volume that's shown in the second data stream to be trade volume. So now I have, in EasyLanguage anyway, I have this data stream providing the ticks, this data stream providing the volume, and I can create a custom indicator that divides one by the other and gives me average trade size. And so this is something that I use when I'm trying to calculate average trade size. And so this is just a workspace that I thought would be fun to provide. Fits right in line with this seminar. Here you can see the volume for the two data streams. This volume indicator is the volume for this data stream. This indicator is the volume for this data stream. Of course, it's the same data stream. It's just that that setting, that drop-down setting, has changed where this is the number of trades per bar, this is the number of shares per bar. And then, of course, this indicator takes both of those pieces of information, divides this one by this one, and gives us the answer. Now, the other thing is that you'll notice I'm doing this on a 390-minute chart. That's because in TradeStation, daily charts do not provide the tick count, or the number of trades per bar. That's something that we do not keep track of on our data network and make it available to. We actually keep track of it on our data network, but we're actually, that's not available to you at this time. So if you want to do this work, what the average trade size is on a daily bar, you can't do it on daily bars because daily bars do not provide the tick information. So a trick that I use is I use a 390-minute bar, which is the number of minutes in a day. And so basically I'm creating my own artificial daily bars using minute data. And I'm able to then get the tick count because tick count's available on minute data. And I'm able to get my average trade size. Now I grant you it's jumping through a lot of hoops here to get that number, but the great thing about TradeStation is that if you ever come across something that doesn't on the surface look easy to do, there's always a way around it with TradeStation. That's the beauty of this. With EasyLanguage and with the flexibility that you get within the charting application, you can always create an analysis environment to do just about anything that you can imagine. And so here, yes, excuse me, there's probably a better way for us to handle this, and I'm sure we will in the future. But until that happens, of course, you know, there's always a way to get to the answer that you need to in TradeStation. That's one of the strengths of TradeStation. All right, let's see here. All right, so that's one of the things I wanted to show you. Let's talk about a little more advanced multi-data analysis and some EasyLanguage issues. What I'd like to show you now is what multi-data analysis looks like in EasyLanguage. The way that we reference multi-data streams in EasyLanguage is with the data reserve word. And when you create a chart, by default, the symbol that creates the chart is always referred to as data 1. You can never delete data 1 from the chart. The symbol that creates the chart, you can close the chart, of course, but you can never delete the symbol that created the chart. And in this case, we always refer to that as data 1. But the word data 1, when referencing that initial data stream, is always implied. So if I say close, EasyLanguage knows that I mean close of data 1. I don't have to say of data 1. But if I add additional data streams to the chart and I want to reference those additional data streams within my EasyLanguage, then I have to explicitly tell EasyLanguage which data stream I want to look at. So if I want the close of the second data stream, I have to say close of data 2, or close of data 3, or high of data 4, or volume of data 20. The point is I have to be explicit and say if I want one of those additional data streams, I have to say of data X, whatever that data stream X number is. There's two syntaxes that we can use in EasyLanguage to do this work. One is we can explicitly say data 1, data 2, data 3 using that data reserve word, and there's no space between the number and the word data. That becomes the reserve word, and there's, as you know, there's up to 50 data streams, so I can say close of data 1, close of data 2, close of data 49, close of data 50. Of course, if you have 50 data streams in your chart, it gets a little unwieldy to try to reference those multi-data streams in that fashion. So the data reserve word also has the ability to have a parameter in parentheses, which is the data number itself. So for example, I can say close of data and then in parentheses 2, 3, 4, up to 50. That gives me the ability to put that data word inside of a loop so that I can reference them using a variable. and just a counter that goes through those very quickly. Excuse me, and that will make the indicator much more efficient and make it much easier to write those kinds of indicators that are using many multi-data references within the same indicator. There are two main reasons that there's two interesting ways of using large numbers of multi-data elements within a chart, and I'm going to show you the two that I like, that I've been experimenting with. The first one is to build your own composites, and this is a workspace. This chart actually has 50 data streams in it. I'm going to go to Format Symbol, and here you can see what I did is I picked what I thought were the 48 most important stocks in the market based on volume and market cap and that kind of thing. You're going to have your own symbols that you think are important, but you know, the Dow 65 is a great starting point. You look at the Dow 65 index, that has the 65 largest market cap stocks, and it's a great collection of great, you know, U.S. companies that really affect the overall market. And I picked 48 of them that I like, that I think are the most important. You'll have your own list. And then the last two symbols in the chart I put in the diamonds and spiders just as reference symbols, so that I can see how my composite affects the overall markets of the diamonds and the spiders. And so what I'm going to do is I'm going to create an indicator that is a composite net change of these 48 symbols. In other words, I'm going to take the net change from one bar to the next bar for all 48 symbols, and I'm going to add those up, and I'm going to find out what the net change for my unique composite of 48 symbols are. So basically it's my way of creating my own index. This is the Burke 48, if you will, and I'm going to measure that on a percent change basis, you know, from one bar to the next bar. And so what I did is, these are 5-minute charts, so I want to keep track of it during the day. And the indicator that you see here, the little dots, is in fact that indicator. This is a multi-data composite index. It has an input, which is the number of symbols. That's very important. Multi-data indicators like this, basically what I have is a loop inside of that indicator that goes through all 48 of them, calculates the percent change, and then sums them up. Well, EasyLanguage doesn't know how many symbols are in the chart or how many of the symbols in the chart you want to be part of your composite index. So you have to tell it that. And most of the time when I'm working with these kinds of indicators, I'll build an input into that indicator that does just that. So if I go to Format Analysis Technique, my composite index here has an input, which is how many symbols are in the chart that are part of my composite. In this case, it's going to go 1 to 48. And what it does is it calculates on each bar, and by the way, right now this is not updating real time, but it could. I don't have it updating real time just for processor efficiency right now because I have lots of stuff open, but I will turn this on here in a second. You can see as it updates here. But the point is that on each of those 48 symbols in the chart, it's calculating what is the percent change. This is the 0 line, and you can see today's been up pretty much. Not quite. It's never really been up 1% today. It was up. The composite anyway is up right now just a fraction. You can see how the overall market is doing today on the 5-minute chart. You can see the market was up a little bit here, and it's kind of trailing down a little bit here now. But the point is, this is my composite. This is my composite of 48 symbols, and I'm keeping track of that as a net change composite indicator. When the market's down, the composite is below 0, and I can see it cross above and below 0 during the day. So it's my way of measuring that. If you look at the code for this, it'll be a nice template for any kind of an index that you want to write for yourself. If you want to write your own custom composite index, maybe you're not doing it on net change, maybe you're doing it on prices, or however you're doing it, this indicator will give you a great template for that. Here you can see I create an input, which is the number of symbols. I have to calculate a couple of variables. I'm storing all the information in an array. I initialize the array here, And then basically this is my loop statement that goes through all 48 symbols. It calculates the percent change from this bar with the close of the previous day, and then it sums that all up and gives me my percent change for the day, and whatever that is, positive or negative. And I'm also plotting a zero reference line there. So that's a good template for this is a good template for a composite type indicator. Don't worry too much about this code. If you're not an EasyLanguage programmer at this point, you will be at some point, and you'll have this code to work with. But otherwise, this indicator will work just fine with any set of symbols that you want to put into a chart, and just build a very simple composite based on net change. Another indicator that I find interesting that is reported by both the New York Stock Exchange and the NASDAQ Stock Exchange are the Ticky indicators. The Ticky indicators tell you based on either all the stocks in the New York Stock Exchange or the Dow 30, or I think it's the NASDAQ does one as well. There's a Ticky Q. But basically what it does is it looks at a set of symbols and it says how many are on an uptick right now and how many are on a downtick right now, and it nets it out. And so basically you get if you look at the Ticky, you can see how many stocks in the Dow 30 are up at any one time or how many are down at any one time. And I'm going to just bring up a quick chart here. I'll type in $TIKI. I think that's correct. There we go. And here you can see that 12 stocks in the Dow 30 are up, 8, 4. And basically this is a real-time number that tells you how many out of the 30 are up or down right now from one tick to the next tick. And you can see it ranges obviously from positive 30 to minus 30 depending on how the market goes from any one point. So that's the Ticky. I thought it would be cool if I could do that for any list of stocks, not just the Dow 30 or all the stock. Obviously I can't do all the stocks, but I could do up to 50 stocks. And so what I did is for the same 48 symbols that are in here, I wrote an indicator that does exactly what Ticky does. It looks to see whether this tick is higher than the previous tick, and if it is, it gets a positive 1. If it's lower, it gets a minus 1, and then it sums those up, and we can see here how the market is performing, how these 48 symbols are performing based on that. Now I have it turned off right now, so I'm going to turn it on so that you can see it, but it'll actually update real time just like Ticky does. If I go to Format Analysis Technique and my Ticky, I have it turned off, update real time. So we'll turn this on for just a second and you can see that, and that actually is counting on every tick. It's recounting all 48 symbols so that if one changes from up or down, you get that instant change. So right now you can see 22 out of my 48 are down. And so I thought that was kind of interesting to be able to create the same indicator that they use for Ticky, but now I can do it on a custom list of symbols and create my own Ticky based on whatever symbols I have in the chart. So I thought that was interesting. Now what makes this indicator possible is a new variable type in EasyLanguage called an interbar persist variable. An interbar persist variable allows a variable to hold its value tick by tick. Typically, and the way that TradeStation variables work, normal variables anyway, is that whenever you reference a variable, it's always referencing the last closed bar value of that variable. So we never, every time a new tick comes in, we throw away what the previous tick was as far as the variable is concerned. And that's the normal behavior for variables, so you can calculate indicators and those kinds of things. But if you want to be able to retain what the state of the last tick was, you simply declare a variable intrabar persist. This allows this variable to then hold its value from the previous tick, not throw it away, so that I can see whether the current tick is higher or lower than the previous tick. And this intrabar persist declaration allows me to create a Ticky indicator, something we could never do in TradeStation prior to TradeStation 8. So this is a great enhancement to EasyLanguage, which allows us to do that kind of work and keep track and look back at previous ticks, not just previous bars. Finally, the last thing I want to show you is kind of a hybrid indicator, which uses a percent change chart. This is a workspace and a chart that I use for sector analysis. Quite often, if you ask people whether TradeStation does sector analysis, you'll get a mix of answers. Most of the answers are no, we don't really do sector analysis at TradeStation. And when I hear that, I kind of shudder, because TradeStation is the perfect tool to do sector analysis. TradeStation allows you, using ETFs and holders, to put a list of symbols into a chart covering all aspects of the U.S. economy, including all the different industry group holders or major market indexes, or you can do all the different stock markets around the world. I mean, if you can think of a sector, there's probably a list of symbols that will mimic that sector very well. In this case, what I've done is I've created a chart that has 23 of the major market indexes for the U.S. markets, including all the Russells and the S&P indexes, some of the Dow indexes, NASDAQ indexes. So here in this chart basically is my sectors, all of the major market sectors in the U.S. markets, and I have a percent change chart which is looking at those markets as of March 5th of this year, and basically it's basically from the beginning of the month this year, 2 weeks ago. And I want to see what the relative performance is of all of those indexes over the last 2 weeks. And what this percent change chart does is it ranks them for me automatically. And so there's an indicator that's applied to here. This blue line that you see overlaying the percent change chart is actually an indicator. And that indicator is actually calculating which of these 23 stocks is the best performing, which one is the worst performing, and it actually displays it here as a text message at the top and bottom, so I can see always what is the best performing and what is the worst performing within this sector. This indicator also has one additional advanced feature, and that is that it uses analysis commentary to give you a detailed breakdown of what's going on with these 23 sectors. If I go to the View and Analysis Commentary icon here, there is an analysis commentary report. If I click on this last blue bar here, on the bar with that analysis commentary icon, it brings up a specialized report, which is analysis commentary for these sectors. And basically it gives me a breakdown of all 23 symbols. I can see which is the worst, which is the best, and which is the worst performing in order, so it ranks them for me from best to worst. I can see what the 52-week high and low is, what the volume is, make sure there's liquidity. But in addition to this, notice that it shows me what the rank is of these 23 symbols, what the rank was 1 bar ago, what the rank was 10 bars ago, what the rank was 20 bars ago, so that I can see the trend in these ranks. And I can see which ones are moving up and down within that list. And so this indicator, which is overlaying the percent change chart here, creates this report. And you can put in up to 50 symbols into a chart, apply this indicator, and it will generate this report for whatever symbols that you have in your chart. Just remember though, like with most of these kinds of indicators, you have to set the number of symbols in the inputs that you have in the chart. That's very important. So when you're using this, make sure that you set the number of symbols that you put into the chart before you apply the indicator. That's going to be critical. The other thing is that this look back here, this 10 and 20 that you see as inputs here, those are the same 10 and 20 that you see here in the report. So if you want to know what the rankings were, 50 bars and 200 bars ago, you could do that as well. So the inputs control these two ranking columns of what was the rank X number of bars ago. And so this is a very advanced way of looking at sector analysis, but using TradeStation. And so this is one of those additional tools. You can actually open up the indicator and see how I created this analysis commentary using an HTML control. This kind of reporting can be done with really anything, including data mining in TradeStation or whatever your analysis is. You can do very creative things with this analysis commentary technology. Let me show you one more time how to bring that analysis commentary up. Basically, once you have the sector symbols in there, you apply the sector symbol, make sure you set the correct number of symbols. You can then look at the report, the sector report, by going to View and Analysis Commentary, and then simply click on the last blue bar in the chart, and that brings up the report. This is Analysis Commentary. Even if you just make a note to yourself to learn more about analysis commentary, that would be worthwhile, because it really opens up a lot of interesting reporting options for you. If you're creating indicators and strategies, you can use that analysis commentary to give you additional information about what's going on in the calculations. You couldn't see the inputs. Thank you very much. I just got a question. When I brought up the format analysis techniques, the inputs were not on the screen. I apologize for that. I'm working in a kind of an interesting environment here where a certain section of my screen is what's actually being sent out to you. So I appreciate that email very quickly. Let me show you those inputs one more time. I'll bring it down here so you can see it. Here you go. So here the number of symbols is the number of symbols in the chart. Here you have the two look-back periods within that report. And I have it set to 10 and 20, but if I wanted to, I could make it 20 and 50 by changing those inputs there and clicking Close. Then when I go to the View Analysis Commentary and bring up this report, notice that these two, this is what the rank was 20 bars ago, this was what the rank was 50 bars ago. And so I get that additional information. Since we are on advanced topics here, one of the questions coming in is how would I mix minute bars and tick bars? I guess I kind of fell into that trap since I said there's just about anything you can do. There's a solution for it. Since you can't really mix minute and tick bars in a multi-data chart, what you can do though is you can create two separate charts where one chart has minute data in it, the other chart has tick data in it, and then you use a external program, which is a global variable DLL, which is available from the EasyLanguage file library. It allows you to set a memory location from one chart and read it in the other chart. And so basically it creates a bridge between two charts, so that if one chart is a tick chart and one chart is a minute chart, they could actually talk to each other through the process of this third-party global variable. And so I think that is a very effective way of accomplishing that exact same thing. TradeStation doesn't really offer global variables built into the EasyLanguage language right now, but using a third-party DLL, and basically EasyLanguage has access to higher level programming languages like C++. You can write a program in C++, which is a DLL, which basically manages a memory location outside of TradeStation, so that one chart can set the memory location, another chart can read it. If you go to the EasyLanguage file library on our support site and look under the category of compatible DLLs, you'll find 2 or 3 solutions there where you can download for free right now a global variable DLL, which will allow you to do that exact work. So if you just went to the forums and did a search on global variable or DLLs, you would be able to find the resources for that. So in recapping, multi-data analysis is a way of looking at multiple data streams within the same chart, up to 50 symbols within the same chart. And EasyLanguage, of course, is the mechanism in which we can reference each of these data streams. And we can do very, very creative things, including sector analysis or composite index creation, The percent change chart functionality is really amazing for looking at a quantifiable way of looking at overlaying symbols on top of each other. And of course, multi-data analysis can be used in strategies in all of these environments. So whatever your analysis is, whether it's sector analysis or it's a composite index analysis or percent change analysis, you can take that analysis, build your rules, and have your strategies trade based on multi-data analysis and multi-data rules as well. So as I said a little bit earlier, we will be archiving this seminar in a few days, 3 or 4 days. It usually takes us to do that. In addition, all of the workspaces and all of the EasyLanguage, including the sector analysis and the composite index stuff, all of that, the Tiki indicator, all of those other indicators, is probably, I think there's 5 or 6 indicators that are part of this seminar. All of that EasyLanguage, all of the workspaces, you can download, and they'll come up just the way that I showed them to you today. Just make sure that you import the ELD file, the EasyLanguage document file, before you try to bring up the workspaces. That's the only restriction, of course. That should always be the case whenever you're downloading information from our seminars. Always import the EasyLanguage first, and then you can open up the workspaces. So I want to thank you for spending this time with me today. Multi-data analysis is one of my favorite topics. I love talking about it in the live seminars that we do, and I think you'll find it a really interesting and fun way of looking at TradeStation and technical analysis. So try to utilize and practice looking at multi-data charts. It's a great skill to have in TradeStation, especially for as you get into more interesting kinds of analysis techniques and strategies. Multi-data analysis will come into play more and more. So look for the archive in the next 4 or 5 days, and the zip file. And thank you for spending this time with me. Successful trading isn't easy. It takes serious tools, and TradeStation is the right place to be for that. That's for sure. So good luck in your trading, and good afternoon. Thank you very much.